Bismillahirrahmanirrahim. My name is Didarana. Welcome to my YouTube channel. First of all, I would like to request please follow, share, and subscribe my YouTube channel. Today, our topic is financial instruments. Meaning of financial instruments. Financial instruments are financial contracts of different nature made between institutional units. These comprise the full range of financial claims and liabilities between institutional units, including liabilities like commitments, etc. Financial instruments are contracts that gives rise to financial assets to one equity and a financial liability or an equity instrument to another entity. Financial instruments include primary financial instruments like receivables, payables, loans, and advances, and bonds, investment in equity instruments, cash, and bank balances, derivative instruments like options, futures, swaps, cap, collar, floor, forward rate agreement, FRA, etc. Types of financial instruments: deposits, SDRs, borrowings, loans, shares, and other equity, debtors or bonds, other account receivables and payables, financial derivatives, letter of guarantee, letter of credit, financial commitments, pledged financial asset. Deposits. Deposits include all claims on the central bank and other depository corporations represented as bank deposits. In some cases, other financial corporations may also accept deposits. Deposits of depository corporations can fall into the two categories: transferable deposits and other deposits. Non transferable deposits. Normally, separate subcategories are used for deposits denominated in national currency and for those in foreign currency. SDRs, special drawing rights. SDRs are international reserve assets created by the IMF and allocated to member countries to supplement existing official reserves. SDRs are treated as the IMF's liability. SDRs are held only by the IMF member countries and by a limited number of international financial organizations. SDR holdings are held exclusively by officially authorities, which are normally the central banks. Transactions in SDRs between the IMF members or between the IMF and its members are treated as financial transactions. SDR holdings represent unconditional rights to holders to obtain foreign exchange or other reserve assets from other IMF members. Borrowings. Normally, borrowings are not considered as a separate financial instruments. Borrowing is carried out through other financial instruments, for example, loans, deposits, etc. Nevertheless, because of American law, borrowings in American can be treated as a separate financial instrument as these are source of funds for credit institutions. According to American Civil Code, the lender gives the borrower money under the loan agreement and the borrower undertakes to return the received amount to lender as and when specified by the agreement. If the maturity date is not specified or it is specified as demand, the amount of the loan shall be returned within 30 days upon the lender's request unless otherwise provided by the agreement. Thus, the borrowings as well as deposits can be both demand and time. Opposed to time deposits, borrowings are less liquid because lenders' claim on collection of loan is due to some restrictions unless otherwise provided by the agreement. In a borrowing transaction, the lender will earn interest against the amount provided. Loans. Loans are financial assets that are created when a creditor lends funds directly to a debtor borrower, evidenced by non negotiable documents. Short term loans. Short term loans normally involve loans with maturity of 1 year or less. However, for of different practices between the countries. Short term loans can be defined, including loans with maturity of up to 2 years. All loans that will mature upon request are classified as short term, even if it is expected that these loans will not be repaid within 1 year. Medium term loans, depending on practices applied in countries, loans with maturity from 1 to 5 years are classified as medium term loans. Long term loans. Long term loans include the loans with maturity that exceeds those who short and medium term loans according to statistical classification, repo agreements, financial leasing, factoring, operations and other similar agreements are classified under the category of loans. At the end, I again request please follow, share and subscribe my YouTube channel. Thank you. Allah Hafiz.